Hello and welcome back to the video series on buy-to-let investing in 2023. So this is the fourth video in the series. Essentially in this video we're going to be looking at rental income, making sure that your rental income sufficiently covers your interest loan payments and that the banks are happy with that. And then also something called stress testing, which again is something that the banks will be looking at, but also you should be doing as well to prevent any shocks a bit further down the line. So effectively, if we just talk about what these different things are, and then we'll jump into a bit more detail. So obviously, the rental income, is the income that's coming in from the tenant that's renting the property off you. They're probably going to pay it every month to you, and then what you need to do from making sure that you're compliant with the bank's regulations and the bank's calculations is that rental income needs to be slightly higher than the interest-only mortgage payments that you're going to be paying out. And this will have a bearing on how much the bank will actually lend you as well. Because obviously the more you borrow, the higher your loan to value, the higher your interest payments are going to be as well. Now, generally, what they'll want to see is that your rent coming in is generally 1.25 to 1.5 times the interest rate payments going out. And again, we'll jump into some figures on that in a moment so you can see exactly what that looks like. And this is really just to make sure that you've got enough rent coming in to cover any kind of costs and bits and pieces. There will be other costs. There'll be maintenance, insurance, and other bits. So the banks don't want to see that your rental income coming in is £500 a month and your mortgage payment going out is £500 a month, because that's probably not sustainable for very long. It means you're going to be putting cash in to actually make sure the mortgage payments are being made. And then the other thing they look at is this thing called stress testing. So this has become even more important over the last sort of year or so as interest rates have kind of gone up. So what it basically means is that although they may lend to you at, let's say they lend to you at 5%, what they might ask you to do is, what do your payments look like if interest rates went up to 6% or 7%? What they do is they stress test the repayment calculation to sort of see what would happen. If the interest rates went up to 7%, is the rental income coming in still going to be able to cover the mortgage payments going out? So let's jump over to the whiteboard and we'll do a little bit more detail on this. Let's just say your rental income coming off this property is going to be £500 per month. So that's your rent coming in. And what we want to know is what's your mortgage payment going to be? So if we just go back to the previous example, we can see that we're taking out a £75,000 on this example here. We can see that we're taking out a £75,000 loan. So what we need to do is figure out what the rental payment is going to be on a £75,000 loan. So the easiest way to do that is just take 75k, and let's say we get the loan at let's say we get the loan at 5%. Okay, so what we're going to do is we're going to take £75,000, divide it by 100 and multiply it by 5. Okay, so your annual interest payment is going to be £3,750, and obviously we really want to know what that's going to be monthly, so we just divide that by 12, which gives us a figure of £312.50. Now, if the bank was happy that you didn't need to stress test the interest rate, and they just wanted to know that your coverage, your rental coverage, was going to be more than enough to cover the interest payment going out. So this is your interest only mortgage payment. Okay, per month. So what they would generally do is ask you to take that figure and multiply it by either 1.25 or 1.5. So let's take 31250 and times it by 1.25. So that comes out at £390.63. So does that, obviously is the rent coming in, is the rent coming in up here greater than the mortgage going out? Yes, they should be happy with that. But what happens if they asked for it at what happens if they have to do 1.5 times? So let's do 300 and oops. So let's do 312.50 times 1.5. So that comes out at 468.75. So it covers it, but only just. We're getting quite close. We're getting quite close at the moment. Now, what you need to be careful of is, interest rates are probably going to keep going up at the moment. So let's do the same calculation, but let's work it out. So rather than using, 5%, what happens if interest rates were to go up to 8%? Okay, so let's do the same calculation again. Let's do it in a different colour just so we've got a contrast. So we want 75k at 8%. So again, we do the same calculation. So we divide it by 100, multiply it by 8. 75,000 divided by 100 times 8 is 6,000. And divide that by 12, it's 500. So it's £500 a month. So your interest payment going out is exactly the same as your rental coming in. Now, if the bank specifically asked you to stress test at 8%, they wouldn't give you the mortgage because there's no coverage. Because what they would then do is go, right, take that, that's got to be your baseline figure. Now, what they want you to do is then multiply that by, let's say multiply by 1.25 times 1.25, it's 625. So in that scenario where the banks are stress testing, they're asking for stress testing at 8%, and they want a rental coverage of 1.25, you would need to be getting a minimum of £625 a month in order to get approved for that mortgage. So there's one or two things they might do. They might turn around and say, no, we're just not giving you the mortgage. It doesn't work. It's not your rental income isn't high enough. Or they might turn around and say, we can lend you, but we can lend to you, but we're going to reduce the amount that we can lend you. So it may not be 75,000 they lend you. They might reduce it to say 60,000. So they're effectively reducing the loan to value that they're offering you. So this is why it's so important to understand what the market rental figure is that you can get. This figure here. And then versus how this all kind of works out from what lending that the bank is going to give you. So I hope that helps. Please let me know if you've got any questions, and we'll be digging a bit deeper in the next video. Thanks for watching. All the best.